Hello guys, this is Ankur here, and I welcome all you to my YouTube channel Technical Analysis the Unbiased View. So in today's video, quickly we're going to discuss State Bank of India (SBI). This is State Bank of India's daily chart in cash equity. So State Bank of India, as you can see, has given a breakout over here, correct? However, this breakout has come out of a bearish rising wedge pattern. So rising wedge pattern we don't consider as to be a very bullish pattern, right? The falling wedge pattern is considered as a bullish pattern. So this breakout, which is eclipsed also, has come out of a current developing, or you can say current completed bearish rising wedge pattern. Now there are a couple of things which we have to look into it in the past, present, and future. In the past, as you can see, this area was a resistance, and exactly within this pattern, this area became another resistance. Here, the price couldn't reach to the top, but however, it rejected over here. And finally, today we saw the breakout. Similarly, on the lower side, you can see this as a support of this rising wedge pattern, and price again took the support over here within the same structure. Now, couple of things which we have to carefully look in SBI moving forward from here. If at all it resumes the pattern and this breakout becomes a failed breakout, the immediate support will be this band, which you can see this highlighted band. Now, in the third slide, we'll talk about all the levels. In the first two slides, we'll just talk about the patterns and the structure. So, if at all it resumes the pattern, it will resume the pattern and it will touch the this base first. So this base will become the first support to the SBI. Another thing which what I have done is that I have drawn a parallel channel within the structure. Within the structure, why? Because I have also used Gann wave. So these are the Gann wave. Now, very interestingly, the upper range of the parallel channel, which is this channel, is overlapping. Sorry, Gann wave 1 bar 1, right? Now there are two things happening here at the same time. This 50% of the small upper channel, correct? This 50% is the support also. So if at all it breaks and resumes the rising wedge pattern where it took the resistance over here and it took the, now it gave a breakout, correct? It gave a breakout. So if it fall back and comes back, it will also come below the 50% of this channel. As you can see, within this channel, within this highlighted area, there were resistance also. So if at all SBI comes back, it will also come below the 50% of this channel, which is this area. So it will break this area as well as this area, these two areas. Right? Now quickly moving towards the second slide. This is nothing. This is just the small breakdown of what we have seen just now. There was a falling channel breakout, correct, in the past. So this is the breakout of this falling channel. And the most important area right now in SBI is this consolidation box. This area. I will tell you the levels in next slide. So this consolidation box is very most important area. It did break the consolidation range once, but as you can see, fantastically, it took the support of the extended after the breakout. This is the extended trend line, correct? You can say that it broke the consolidation, but it exactly took the support of the extended trend line after the breakout. Now, there's another thing which is happening is the SBI gave the breakout of the ascending triangle pattern. So this was the resistance and this was the ascending channel. So just now what we saw over here, that it gave the breakout, correct? It gave the breakout of rising wedge, not this slide, one second. This slide, yeah, correct. Just now we saw that it gave a breakout of rising wedge. Actually, it also gave a breakout of ascending triangle also, correct? You see this area. So this slide is nothing, it's just a breakdown of the few chart structure patterns which occurred in the past in SBI. So right now this area plus this area, this is most crucial for us. Why? Reason being, since I have told you that right now it is in the rising wedge pattern, which is considered to be a bearish pattern. So what if SBI breaks down? So this video is actually not for the traders, but for the people who would like to invest in SBI, even at this junction, even at this junction, saying that the breakout is not a fake breakout and the momentum will be carried on. So what are the important levels now? The first and most important level, since SBI closed at 490, the first and foremost important level right now for SBI is 468 to 470. Why? The answer is it is the neckline of that ascending triangle pattern which took the breakout. Correct? Now, interestingly, if you draw the Gann wave from the COVID lows, if the rising wedge pattern, if this rising wedge pattern resumes and breaks the neckline, it is also breaking the Gann wave 2 bar 1. Correct? Then the next important level for an investor or the swing trader, a swing trader who would like to hold it for 3 months, or an investor who's having a horizon of 1 to 3 years or maybe 2 years, the second level at this particular junction is 442, which is the upper base of the consolidation range, and the lower range of the consolidation range is 418, and 400 is the double bottom range where we saw that it extended its support after the falling breakout, falling channel breakout, and it broke the consolidation. It took the support of the extended trend line. So right now, having SBI at 490, even if it comes back, relaxes, the first support will be 468 to 470. So this support will be um, valid for coming week also. So if there is a small relaxation in Bank Nifty or small sideways correction in Bank Nifty, so the first and foremost support is 468 to 470. What we have to observe? We have to observe whether SBI is closing below 468 to 470 on a daily or a weekly basis. If it is closing below 468 to 470 on a daily or weekly basis, we have to see whether it's taking the support at 442 or not. If it is not taking a support at 442, it is closing below 442 on a weekly or daily basis. The next support activated will be 418. And last but not the least would be 400, which is a double bottom, right? But an interesting thing which we have to understand right now here is between 4, if market corrects or SBI corrects at 490, presuming that it is a bearish rising wedge pattern and it will break down. From 490 to 442 is almost like 9% correction, correct, at this particular zone. From 490 to 418 is like almost 14% correction, which is this area. And if it corrects very drastically from 490 and keep on falling, then the valid support, the last support for the investors is 400, which is as good as like 18%. So on all practical reason, we can say that if any bad event also happen, at least nothing will bad happen than the COVID which we have recently surpassed. So it will not correct beyond 18 to 20%, correct, beyond 18%. So in my view, even at this particular area, even at the live highs, even at the uh, top closing of the current trend, SBI looks to me a very good investment opportunity for at least 1 to 2 years. We will only exit in SBI if it is going below 400, correct? So I don't see, even in a bad event for coming next 1 to 2 years, I don't see very quickly SBI going below 18% from the current rate. And mind you, it has got 13% weightage in Bank Nifty. So 13% of Bank Nifty today from very close today, which is like 39,400, is 5,000 points. So even if Bank Nifty you say goes up to 34,000 and SBI slips completely 18% or 13%, mind you, 400 to 418 will be a very good support. So what are the uses of these levels? 468 to 470, this. These are the levels which you can act upon as a buy on dips. Nothing above it, nothing below it. At least for sure, nothing above it. So if SBI breaks 468 to 470, wait for SBI to touch 442 and see whether it is respecting 442 on a daily or weekly basis. If it is respecting, going sideways, taking multiple support and trying to move up, add this is the level we should add on the dips. God forbid if it breaks that also in the following week or next week or after 2 weeks, then 418 is the another level you should add on dips. Correct? Nothing between, don't average between 418 to 442. Leave that. That is like completely no trading zone or no investing zone. For traders, immediately in coming couple of weeks or 3 weeks or next month, if it is touches 468, 470 and it tests the neckline of the ascending triangle and again trying to resume and go up, this is the support where we should go long. If it closes below it, mark the high as a stop loss and short. Correct. So very good levels available in the State Bank of India, and for investors particularly, you have an opportunity to average on dips till 18%. Correct, and its weightage is 13% in Bank Nifty. So I don't see Bank Nifty correcting more than 5,000 points if you take the 13% of 39,400, which is today's closing. So making all connecting all the dots and making the probability, I think SBI is a very good opportunity for next 1 to 2 years. If you don't want to buy the stocks which is like 2,000 or 1,500 or beyond that, I think this is a good purchase, right? So this was my analysis on SBI. I hope I'm clear, and this video is more for the people who want to invest for a long term in SBI, and for a short term also we have a few levels. But the levels are there. Level will be for investor also, and levels are valid for the traders also. But for investors, for buying on dips, these are the levels you should keep an eye on: 468 to 470, 442, 418, 400. and from current closing till here it is as good as approximately 18%. So in this structure, with respect to this structure, we have got a good opportunity for people who missed SBI. There is a good opportunity available even at this place. So that is the whole objective of making the video. All right. So thank you guys. Thanks for your time and keep watching technical analysis, the unbiased view. Bye bye.